Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. In this episode, we speak with Joshua Silver, founder and CEO of Rainforest, a payments-as-a-service provider built for vertical software platforms. Rainforest enables platforms to embed payments directly into their products without taking on risk, compliance, or operational burdens. Its low-code white-label solution supports card, ACH, and Apple Pay transactions, helping software companies drive payments volume, grow revenue, and maintain full control over their customer relationships. Before founding Rainforest, Joshua co-founded Patientco, later acquired by Waystar, and advised more than 50 software companies on payment strategy. Drawing on 2 decades in embedded payments and SaaS, he founded Rainforest to fill a gap in the market for a technically strong, service-oriented, and economically balanced payment solution. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. Joshua, great to see you. Thanks for taking the time.
Absolutely. Really appreciate being here.
You're in Atlanta, right?
I am. I'm based in Atlanta, and I've been in Atlanta almost 30 years now and have built 3 companies in Atlanta now. So Atlanta is pretty much home.
Excellent. Well, let's get right into it. You know, the interesting thing about payments today, it's dominated by Stripe. It's like the default.
Yep.
Even if you go try to find other payment providers out there, you always default to 3 different companies, 3 major outlets. Why did you start Rainforest, and what was the problem you saw with the other providers out there?
It's a great question. So my background is I'm a serial entrepreneur and previously had a vertical software company in the healthcare payment space called Patientco. We helped hospitals and doctors' offices collect patient payments more effectively. And one of the challenges we had over the decade plus building that company was with payments infrastructure. And back in those days, we had to build it all ourselves because this was pre-Stripe, this was pre-Square, this was pre all the companies that exist today. So we had to build it. Fast forward a few years after that, I was running a consulting firm helping other software companies in all different verticals figure out their payment strategy and solution. And time again, running RFP processes and helping with those selection processes, we kept finding that we couldn't get vendors that were going to be good across 3 dimensions. Those dimensions are product and technology. We want to make sure that it's modern. We want great support. And we want good economics and commercial terms. And what I found is you can get one of those. You can go with a scaled incumbent and get cheap processing, but no service and no tech. You could go with someone like Stripe that is going to be better on the technology side, but really a self-service model as opposed to white glove service, and certainly not great on the pricing side or commercial terms. And so that was really the genesis of Rainforest, is we wanted to create a company that would balance all 3 of those things: product and tech, service, support, and the economics and commercials.
You know, the one thing, it seems like the pricing is always the same. It's 2.9% transaction fee. Are you able to beat that?
We are. So one of the interesting things that we do is we operate on what's called a pass-through plus model or an interchange plus model. So all the card networks establish fees that are called interchange. So part of that 2.9% you pay actually goes through the card networks back to the issuers. And that's the largest part of the cost structure there. We pass that on and then have a very transparent markup on top of it. So anytime someone like Stripe is charging you a flat rate of, say, 2.9%, it means that on some transactions they make more and some they make less because the pass-through costs are highly variable. What we do is we make it really transparent what we're making, and that allows you to better negotiate a deal. And so we're very customer friendly in that regard.
Yeah, I mean, I don't want to spend too much time here, but I was approached by someone who said, "Hey, how much are you paying in your fees?" And I said 2.9%. They're like, "Oh, so yeah, Stripe makes a lot of money on some of those transactions. They make a little money on other transactions. What I can do is I can step in and do a more modest markup on each transaction such that the other money goes back to you." And, for a while I was like, okay, that's interesting, but there's all this friction because I don't know you or your system. I can't trust it off the bat. But I mean, there's a lot of money that could be saved if you really actually went into, okay, who can get me the best deal?
Absolutely. Yeah. And we see that all the time, especially our focus market is vertical software platform. So we're not selling directly to individual merchants. We're selling to business management systems and different systems of record, and then all their merchants can come over. And so we're operating at a very different scale because we go into one client that maybe has hundreds or thousands or tens of thousands of merchants behind them. And so we also can kind of get that wholesale rate, if you will.
And so, how has the market adoption been? I presume word travels quickly if you're doing a good job for a software company.
Yeah, it's been phenomenal growth the last couple of years, from a reputation perspective and word of mouth. What we hear most frequently is platforms are really sick and tired of suffering with bad service from other payment companies. That's the number one buying reason for Rainforest is they're paying another payments company a lot of money and they're just not getting the service. And in other industries, you vote with your feet and you move. And historically, Stripe has really dominated this vertical SaaS market. And so there haven't been other alternatives. And, we hear words like Rainforest is a breath of fresh air. It's so great to have competitors now. So we really are giving Stripe, I think, a run for their money and some of the other more established players. At the same time, our growth has been really strong because we're growing in, leaps and bounds. As each new platform comes over, they may bring over $500 million in volume, $1 billion in volume. And so our claim to fame, if you will, is we went from 0 to $1 billion in processing volume in less than a year, from 1 to 2 in less than 6 months. And it's been accelerating ever since. And so really fast growth for a payment company.
Your service is probably hands down better than Stripe. I've tried, we use Stripe and I've tried to get in touch with Stripe. They're very hard to deal with.
Yeah. We hear that same sentiment from a lot of customers. And, one of the challenges in payments is how do you manage risk? And a lot of large companies like Stripe have very limited tools to do it with. And that means that when there's an issue, as soon as there's kind of even the preponderance of any problem whatsoever, they shut the account down. They may hold funds, they may put reserves on. And that's pretty punitive to small merchants who are just trying to run their business. So we've invested a lot in managing risk from a vertical perspective, and that's all part of the service model, making sure that obviously we need to safeguard the payment system and not lose money, but there's definitely a middle ground that we're able to find that some of these larger companies just aren't.
I don't want to veer too far into my complaints about other platforms out there, but it does feel like when they're trying to expand into other products, they find ways to hold on to the cash so that they can do their loan product.
Yeah.
So it just feels that way. I'm not sure if it's me being critical of a platform, but it's like if you really focused on your customer, you wouldn't do that to them.
I agree. I think with Stripe, a couple things we see, one, they're trying to build lots of different products, whether it's business and corporation, lending, banking as a service, stablecoin bridges, all of these different things. And it's just really hard to have quality products across so many different adjacencies. We're really focused on the money movement, the payments, and we do that really well. And, I get asked all the time, when are you going to add lending? When are you going to add all these other products? And we have a strategy there that, involves a lot of close partnerships and partnering with best-in-class companies in those different flavors of fintech, but not spreading ourselves too thin. So that's kind of one thing I'd highlight. And then the second is just around how all these products work together. You may think that because they're all coming from one company, whether it's Stripe or Adyen or Fiserv or anyone else, they all really work together natively. And that doesn't always hold true. And so some of the reason I think that they're holding on to that money is not just to hold on to the money, but the products don't really work as seamlessly together as you might imagine. And so they're having to float those funds and things like that. So it's a tough problem for sure.
And do you tend to focus on one particular area of the business? Like you're more focused on product and tech, and then you have someone focused mostly on the sales and customer service side? Then, the marketing angle or other kind of go-to-market stuff is yet another direction?
Yeah, I'm one of those rare founders who kind of splits time between product and engineering and go to market about 50-50. So by training, I'm a computer scientist, went to Georgia Tech for undergrad here in Atlanta and spent many years in product and engineering. But kind of the second part of my career was focused on go to market and leading partnerships and direct sales growth. So I really, I think, have appreciation having run those functions for a decade each, what makes them work well and what doesn't. And so, I split my time pretty evenly between them. But honestly, we have such a fantastic highly experienced leadership team here at Rainforest. There's about 7 of us on that leadership team, and everybody has not only worked in payments before, but many have actually worked in PayFac before, which is kind of the flavor that we're in, or embedded payments. And so when you have such a qualified and experienced team, I find I don't have to get into the weeds too much. I'm able to just really set the direction and unblock problems as needed, but really rely on the leadership team quite a bit.
And did you know most of your leadership team previously?
I did. So one of the unique benefits of being a repeat founder is you have a whole team that's kind of ready to go. And so a large portion of the Rainforest team actually came over from Patientco. For example, our head of engineering and product, we've worked together for, I think, almost 15 years now. Our head of finance was an early Patientco employee as well, and then many others here on the team. And so not only do you have that subject matter expertise, but you have that inbuilt trust among the team, which I can't say enough about.
Did you have some key learnings? I presume the third time around or fourth time around, it's easier in some regards. Maybe it's still hard in other regards, but what do you think you're better at now that you weren't as good at in the beginning?
I don't think we have long enough in this podcast to cover all of the learnings because it's immense. But a couple just to highlight, some things do get easier. For example, knowledge of the industry and having good contacts there is a whole lot easier. Hiring in some regards is easier, but finding great people is always hard. And I've talked to founders who are less than 10 people, who are at a couple hundred, and those who scale to thousands. And everybody says the same thing. The hardest part of any business is always talent, because if you find the right people, everything else works itself out. So talent is always really challenging. For us, though, the product market fit, that was a huge advantage we had. On day one, we basically had product market fit because me and several of the others on the team had been doing this for 20 years in some cases. And so we knew what the market needed. I'd been doing consulting. I had sat with so many of our prospective customers that, I knew exactly what they were looking for. Many companies have to spend a year or 2 or 3 trying to kind of navigate their way to product market fit. We spent about a year building the platform, but if you look at day one versus today, what we set out to build is almost identical. It was really a question here of how fast we could build it, not what we needed to build. And that's a huge advantage that most first-time founders just won't have.
I mean, speaking to the talent piece, what would you say to a prospective person? I mean, we have folks in our orbit or audience that are in the fintech space that are highly talented. I was just talking to one earlier today. What would you say to someone who's super talented and you wanted to recruit them?
Yeah, well, definitely check out our careers page. We talk a lot about culture. I also post extensively on LinkedIn and kind of give you a behind the scenes view of how we build. Also, some of the mistakes we make. Those are some of the most interesting posts, I think, is when we stand up there and say, here's how we messed up and how we're going to fix it. So definitely check out our culture. That's a huge selling point. The other thing is, we have an amazing team, real A+ players and highly experienced. And the feedback and commentary I get from a lot of new employees when they've been here for a couple months is, wow, it's so nice being amongst my people. My people, of course, being people who care deeply about innovating the payment space, quality, taking care of customers. All of these things are so basic and ingrained in our culture here, but are lacking in 99% of companies, unfortunately.
What's the culture? Is it hybrid, remote?
We have an Atlanta first hiring strategy. We do have an office here. I mean, most of our product and engineering is Atlanta centric. However, for other roles like go to market and partnerships and customer service, those are all remote. So it's Atlanta first, but they're certainly hybrid.
You've raised a good amount of capital, I think almost 60 million or so. You've got some good investors in there. Accels was an early investor. Tell us a little bit about that. I mean, given that you've been around the block, you've done this before, what would you have to say about your current investors and how you go about selecting investors?
That's also something as a repeat founder, you learn early on of, which investors are value add. And so certainly Accel was early on in supporting us and leading the seed round. More recently in our Series A and Series B, Infinity Ventures, which is a fund out of the West Coast that has a lot of ex-PayPal leadership, as well as Matrix, which is a truly iconic firm. Many people haven't heard of them, but they wrote the first check into Apple many, many years ago, or an early check. They've supported Afterpay and Flock Safety and many others. They are truly value add, both on the knowledge set and understanding deeply our space, but also rolling up their sleeves and helping with introductions. So I highly recommend both firms, both Matrix and Infinity Ventures, to other founders who may be building in these types of spaces.
What's one thing that you think most founders miss, or maybe like first time or second time founders they miss when they're in the process, in the heat of building their companies?
I'd say it's not spending enough time with customers. I gave a talk recently about product discovery and figuring out what to build. And one of the key points I make is you have to embed yourself in your customer's workflow. So much so that in my first company, Patientco, when I was trying to learn about healthcare billing, I actually went and worked in the back office of a doctor's office for a couple of weeks, doing the manual data entry. And wouldn't you know it, by the end of 2 weeks, I was an expert at how that worked because I asked a million questions. And a lot of times I'll ask other founders, how does this work in your industry? And they don't have the faintest clue. And to me, that's such a foreign concept. How can you be building a solution that's innovating and trying to cause change when you don't even know how it works today? And so that's probably the number one mistake, is just not being customer centric enough and really, truly, deeply understanding and internalizing how that industry works. And it's a lot of work. You have to spend a lot of time. You have to talk to a lot of different people, but it pays off in spades when you do it right.
We're coming up on time. I have two final questions. One is, can you tell us about a person who's had a profound influence on you?
Yeah. So a couple of people that I would look at that have really influenced me, I think, as I talked about before, growing talent is one of the most important things. And I think early in my career, I probably undervalued how important team and culture and talent were. And so, there's two individuals I'm thinking of. One is someone who started a business that was just really employee centric and did a great job with cultivating talent. And I learned a lot from them just watching them operate. And another was one of my advisors in college, actually, who helped me see the human-centric viewpoint on things and take off my engineering hat and really put on that human-centric lens. And so I think both of those really have influenced me quite a bit in how I build the culture here, which is one of transparency, low ego, collaboration. Those probably have had the most impact versus like a subject matter expert, things like that.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
I'm really passionate about innovation, as you can probably tell. And so I recently joined the Georgia Tech College of Computing Advisory Board. And that is a unique group of people across industry, academia, nonprofits, et cetera, that's providing guidance back to the college of what we should be educating students on. And, as you think about students who are going to go out and do great things in the future, being able to not only work with students and see what they're doing today, but also with so many other brilliant minds from so many other facets of the world and hearing how they're thinking about things and seeing things has just been really rewarding.
Joshua, I want to thank you again for taking the time. It's been a great conversation.
Thanks so much for having me. Really appreciate it.